Good morning, everyone. How are we doing today? It is September 9th, Wednesday, September 9th, and this is, of course, your daily financial news. If you'd like to understand what's going on in investing, your market, real estate every single day, do me a favor, hit that subscribe button as I attempt to bring you this live about 7:30 every single day, 7 days a week, 12 months out of the year, 365 days. While doing that, we are on the march to 10,000 subscribers. I think we need about 700 more. So if you're a new viewer and you like what we do in these daily shows, do me a favor and hit that subscription, hit that like button. I'd like to see this channel grow and grow and grow. So as of the news, lots of stuff going on. It's amazing the stuff that can change in a day. We got some economic data. We got some company reporting earnings that we talked about over the weekend. And of course, we'll start with the new stimulus talks. At this point, as I've been sharing with you for the last, what do you want to call it, 2 weeks or so, I am waiting for this skinny bill. There's been a lot of talk, but no bill. To me, it seems like a very good political move if that's your game. The Senate, McConnell could come out and say, hey, we all agree on these four things. Here's some money. Sign the bill while we negotiate everything else. I think that's a great economic move because it really puts Nancy on her back heels and she has a choice. Does she want to dig in her heels and make it all about bailout to the states? Or does she want to say, yes, let's help the American people? But we don't have a bill. We don't have the skinny bill. So I am wondering if good old Mitch doesn't have the votes, right? I think he needs 51 votes, but he needs like 63 to avoid a filibuster. So I don't think he has the votes. Where is this thing, Mitch? I mean, you had 3 weeks to make sure you can get it done. That's going to be something interesting. I am still hopeful. I have no reason to be hopeful. The politicians, Congress has done nothing for me to think I should be hopeful, but I'm going to believe at the end of the day they do the right thing. Right? We need to continue this bridge that we've built halfway. We need to finish it. We need to get to a vaccine or treatment or whatever you want to call it, so we take death off the table for the most vulnerable. Continuing on, right, we'll sort of put stimulus behind us because at this point we're waiting for Mitch. Don't have anything. The Nasdaq, we've seen a lot of quickest ever, quickest to a bear market, quickest out of a bear market. Well, we went from Nasdaq peak to a Nasdaq correction in 3 days. Nasdaq saw a 10% drop in 3 days. That's kind of a rip your face off rally or whatnot momentum that it's going to scar a lot of people. So it'll be interesting to see if weekends were flushed out. You know, we have a bounce today, which, you know, if you go back and look at, you know, stats, that fourth day bounce is not uncommon. It will be interesting to see what they do. But, you know, do we have a buy the dip or does it move on? So we shall see. What I do have is a couple of earnings. I highlighted two earnings calls that I was going to be following over the weekend. I think we talked Sunday about these. Might have been Monday, right? Kind of off because Monday wasn't a trading day. Might have been Monday. It was Slack and Lululemon. And as we talked, and you can go back and watch it, I said both will report a beat, and they both did. But I was very cautious about what they would say in the second half. So starting with Lululemon, right? This is I don't know what you want to call it, athleisure retailer that does focus on high end, right? Their consumers are well off, right? You get, you know, I don't know what it is, like $100 yoga pants or whatever they are. And they were more cautious about the second half than the market liked. And again, they beat top and bottom, but they were cautious. This is where we are going. We have seen companies pull forward demand, and it is it's starting to unwind, right? As people talk about a vaccine in October, November, December, we're going to see a structural shift. So Lululemon beat top and bottom, but cautious, and their stock is down today. Then there's Slack. Slack is one of these, cloud-based companies who's been growing like a weed, kind of a Nasdaq darling for a long time. It beat top and bottom. It grew revenue by 50%. Third quarter in a row, it grew by 50%, and yet smacked. Now, Slack is one you have to kind of peel back, right? Is it a sign of other cloud-based applications that we are kind of seeing the peak valuation, or is Slack an outlier because they are competing with Microsoft Teams, and maybe Microsoft is just that big bad gorilla out there who always takes out technology companies, which they were known for in the 2000s. So you have to ask yourself: is Slack a sign of things to come in the Nasdaq, where if you don't beat and raise, and you only show 50% growth, that's not enough? I think they were down like 12% or 13% this morning. So, man, when did 50% growth not become enough? And I think that's something Nasdaq investors need to ask themselves, right? I think Slack, you need to ask yourself: is Slack a sign? Is Slack the canary in the coal mine, or is it an outlier because of its big bad competitor? That's a question that needs to be pondered. We do have a deal cancellation. We have been talking about LVMH, Louis Vuitton, buying Tiffany jeweler for 16.2 billion. It was struck, I believe, in early January before this health crisis took hold, and we've talked about it probably half a dozen times. LVMH's owner, richest man in Europe, has been looking for a way to get out of the deal, and he pulled that trigger today. Near as I can tell, he is basing pulling out on the fact that Tiffany wanted to extend the closure into December, and the contract said it had to close within 1 year. And he is going all in that is the reason he has the right to cancel. I expect this to be a lawsuit, much like Simon Properties and I think it was Tannenbaum they were trying to buy and then backed out. But I think LVMH is not buying Tiffany. They will, if anything, they will pay some breakup fee or whatnot. But Tiffany will, the little blue box will be a standalone company moving forward. Tesla's been in the news. Obviously, a 21% drop yesterday. I'm sure it's up today. But there's a lot of people talking about Tesla, and that is one is earnings quality. Lots of people have been talking about and pointing to the fact that they were missed for S&P inclusion in Etsy kind of took its spot. And what they're saying is, yes, they've been profitable 4 quarters in a row, but their earnings have not been from their core business, which is making cars. Right? Their last quarter, they had a great earnings announcements, but most of their profits were selling energy credits. Right? Energy credits, for the most part, fall to the bottom line and made it look a little better than it was. Right? So again, nobody knows, right? S&P, the committee doesn't come out and say why they weren't included, but people are starting to ask questions, right? Tesla's really not making all that much money making cars, right? If that takes hold, which I don't think it will, because Tesla is still this kind of thing that people chase. But if it ever does, if Tesla ever gets evaluated as a car manufacturer, they are clearly overvalued. On the positive side, people are coming to defend Tesla, and they're saying Tesla is not a car manufacturer and they shouldn't be valued as a car manufacturer. They are essentially a tech company on wheels. This has been the tug and pull for Tesla forever. Tech companies have a long history of, strong revenue growth but no earnings. So this is going to continue on. Tesla is going to be that stock that goes forward. So it will be interesting. We do have some talking heads coming out. Stanley Druckenmiller was paraded in front of the CNBC audience this morning at like 5:30 or something, talking about the stock market being a raging mania. He's talking about the Fed and Treasury cohort creating mania in all financial assets, taking rates low, so we have to chase other areas. And then at one point, Stanley went on a pretty big rant about stock splits not creating value, Why do people take stock split companies and they go up 15% the day of the split? There's no value created. A 4 slice pizza becomes a 10 slice pizza. All of those things. So pretty big rant. So we'll see what goes there. Again, this channel is about real estate and your money and investing. Mortgage demand. Again, this seems to be a broken record. Mortgage demand from home buyers was up 3% week on week, but 40% year on year. That's amazing. 40%. This year on year is usually a single digit number. And we are seeing a 40% rise in mortgage apps. Again, those are apps, not deals, not closing, not offers, just apps. But still, it's a metric on a metric, right? It was the same quality as last year. So pretty crazy. Refis also up 3% week on week, but 60% year on year. And that makes sense, right? Rates are clearly lower than last year. So yeah, mortgage demand is up. Home buyers are still raging. I am trying to get some brokers on the phone or in these interviews so we can talk about it, see if the market is still hot or if it's slowing down. I will bring those as I get those lined up. Home Depot is changing how they're going to, talk about the holiday season, right? If they're the first retailer that I saw already anticipating holiday season being different, right? We have historically seen, Thanksgiving and then Black Friday and, come rushing to the mall. Home Depot is changing it up. They're preparing to have 2 months of Black Friday. They are going to make it as much online as in store. So I would expect lots of retailers to do this. I do not expect to see, those videos you and I have probably seen in the past where people are, pressed up against the glass of Walmart trying to get in and get the $50 TV. But maybe. I think that would be a disservice, but we'll see. The holiday season, though, it's right around the corner, and we do need to start thinking about it. So I just thought Home Depot deserved a shout out for attacking it differently. The App Store. Mark Zuckerberg was actually asking an interesting question, and of course he tried to dance around it about, is Apple's App Store a monopoly? And again, I think one of the largest risks the big tech, the big five have is antitrust. And the App Store, right? The 30% VIG they ask from all of the apps and the makers is their Achilles heel. Is the App Store seen as a monopoly? So we'll see where this goes. Again, I think it is something that happens over the next 4 to 5 years. I think Alphabet, Google, Facebook, Apple, all those folks, Amazon, of course, will see some antitrust in the next 4 to 5 years. I did see that Biden issued at least a sketch of an interesting tax incentive and disincentive. Basically, what he is talking about doing is he wants to prioritize manufacturing in the U.S. Sounds good, right? Top of fold kind of title content, but he is going to bring the tax code to bear. So again, it'll be interesting to see how it's done and if there's loopholes. But he is talking about a 10% offshoring penalty. Interesting. Kind of like AMT for you and I back in the day, but a 10% offshoring penalty. And then a 10% advanceable tax credit for bringing stuff back. Interesting. Right idea. It's one of those reasons that I think the next decade will be or the next couple of years will be really good, is we are going to see manufacturing brought back. Again, I'm not saying that Biden wins by any means, but I think either president incents manufacturing coming back, and might as well use the tax code. It is a great equalizer, so it's interesting. He does promise to create 6 executive orders within the first week in office around Made in America. I tried to figure out what the 6 would be. I don't know why 6, not 3, why 1, not 6, but the articles seem to make 6 a big number. Don't know why. Whatever. And then lastly, it was interesting to see one of the talking heads, in this case Howard Marks, trying to talk about things that you and I are probably thinking. When is it time to invest in out of favor assets? He talked about physical assets being out of favor, obviously retail and office. And then he also talked about out of favor stocks, entertainment and hospitality. I think there is a time to start doing that. And he is proposing that it's now. In his world, 2021 gets better, and we're in his world less than 4 months away. So he says that this is now the time for him to start repositioning and maybe, just maybe, locking in some distressed assets. And that's at least something to think about, right? If we really think that post-election, post-inauguration, that we're going to have a vaccine and treatments, that maybe we do have a really good run and we have some manufacturing back and an infrastructure bill, and unemployment just keeps racing back to sub 4%. It's an interesting concept. I'm glad somebody is talking about out of favor assets versus, hey, let's talk about the big six tech stocks and what are you doing there. So at the end of the day, I got a lot of interviews today. Let me look at my board here. Of course, it's Wednesday, so we're going to be talking with Anna Kelly at 8 a.m. I'm interviewing another gentleman at 9 and someone else at 10. Yeah, so we got 3 interviews lined up today. So it will be interesting and long morning. So take care, everyone. Of course, remember, we're racing to 10,000. If you could help me get there, hit the little subscribe button. Thumbs up would be awesome. Take care of yourself, and we will, of course, talk to you tomorrow about 7:30. Bye.